Hi, this is Paul from globaltrainingsoftware.com and a couple of stocks for a potential Santa rally here. I've just spent the last hour or so going through lots of stocks that have had pullbacks in this recent bearish pullback, and I think I've got around about 6 to 10 real hot stocks for my inner circle, and that's what I do. Part of my sort of routine every day is to go and find these stocks after pullbacks and look to swing trade them. So I'm going to go through two of these now and look at that. As a side note, to get those 6 to 10 stocks, I had to go through about 50. I dismiss a lot of those, and one of the things that I always say to my inner circle is you've got to find reasons not to trade, and that is my filtration system, if you like. So yes, with Elliott Wave, I for swing trading I use Elliott Wave and the XPRAD Algo, but just because there's a signal, it doesn't mean it's a great looking trade. What's the risk to reward? Where are we in the channel? Where's the support and resistance zones? Is there earnings just coming up? And there's a list that I go through really quickly and dismiss those trades. And then if I can't find a reason not to trade, then I will put the order on. And these are just two of the ones I've put on with my inner circle. I'm going to put a link in the bottom of this description for the video as well, because I'm opening up my inner circle. It's not going to be so exclusive just to real high-end sophisticated traders. I'm going to have different levels of membership for my inner circle, so more people can access access me and my experience. So let's get through and look at these potential Santa Claus rally type stocks here. So GSK is the first one. I've picked this one as well because you need to understand that this is also listed on the London Stock Exchange, so this is why it's a gappy stock. So right now you can see pre-market we're 41.99. I'm still at 10.30 in the European morning. And why is it showing that pre-market? Purely because on the London Stock Exchange this is today's candle, okay? So it's already having action on the London Stock Exchange, so it's going to affect that price, that pre-market price, and that's why it's so gappy in the US, where it's listed in the US, because it's already had some action. There's already been institutional traders investing, buying shares, selling shares and things like that in there. So this is why we have to be aware of these things. If we come across a stock that's particularly gappy, is it listed somewhere else? Is it listed on the German Stock Exchange, on the FTSE? Those are the sort of things you should know. So now we have a potential fifth wave move. We've had a nice bull run up here, sort of September, October. We had some basing around here, and then it's pulled back on this recent bearish move, and we found some good support. So stochastics crossed over in the oversold zone. We look at the performance of this wave also on the Elliott Wave oscillator. That's crowned. You see the red just in there between 90 and 140%. So the wave 4 is behaving so very well. It's found support in our probability pullback zones, in the amber zone. Also found support in non-linear support with this 55 EMA cloud as well. 55 has to be above the 89, so we're bullish. Wave 4's found support. We've started to move away. We're through the 6-4 moving average high already for this. So we just need to find a decent entry that gives us enough for a potential gap up. We don't want to gap up above where our entry is going to be and have a really poor risk to reward. We look at the rate, I go back and look at the range on that London Stock Exchange, and I look at the range, the average range for the days, and make a sort of, it's almost a judgment call of, where's the sort of maximum that this could gap up today. So this is a sensible entry at 42.18. It's above the highs of yesterday, and it allows for that sort of average gap up when it happens from that bullish price action during the London session there. So we have 42.18 entry. The stop's always just below the wave 4 pivot, and then our automated fifth wave target zone in the middle of theirs, around about $44.50. So we're at 1 to 1.6. So the risk to reward is good. So a stop limit order at 42.18 is very, very sensible. That's our start line. Okay, we don't necessarily buy stocks at market price. We have to have a start line. It has to achieve a certain price before we're more confident that that momentum is going to continue and that fifth wave is going to go and hit at that target. So that's the first stock. The second stock I want to go through is CROX. Okay, I'm only going to go through two of them because obviously the inner circle have priority and they see all of the stocks. So I'm just going to re-isolate this one now, and we're at 3946. So we have to isolate the bottom of the current trend for the Elliott wave to do its count. But also we have to make sure if we're going to isolate we're just interested in this current trend. It moved up. We've had a pullback. Can we measure that pullback? Does it respect Elliott wave rules? One of the things that we look for when we're isolating that Elliott wave is making sure that the stochastics oversold at that point. That's very, very important. So let's just go back. We're going to measure this now. I'm going to use the fib retracement on the Elliott wave oscillator to go to the 0 line. Highest point on the oscillator during the wave 3. Just there. And we can see we've had, we're between that 90 and 140. That's where we need to be. We've had false breakout dots on the stochastic here on our special false breakout stochastic included with the Elliott wave indicator suite. That denotes a really strong bullish trend. When the stochastic pulls back against that and crosses over in the oversold zone, it's like an elastic band. It wants to return to that overbought zone and those false breakout dots, like it did just here, where these lows were, where we've isolated the wave count. Look at these false breakout dots here. The first time it crosses over in there, it comes back, strong bullish momentum, false breakout dots again. So the wave 4 is behaving very, very well. The next is we've just tipped into the red zone. That's fine. There's a 75% probability. These are probability pullback zones. So if find support here, 75% probability is going to go on and hit that automated fifth wave target zone. So we're good. That's the wave 4's behaved well. Not only that, it's found support in the 55 EMA cloud. Again, non-linear support this time. So again, everything's stacking up. Also this time, because I want to be a little bit more aggressive with this entry, I put the regression trend channel on there. I don't really see it because of the candles there, but the Pearson's R is 0.96388211 blah blah blah. But the main thing is it's over 90%, 0.9. It's 0.96. So a very tight regression trend channel there. So we can say when it breaks out of there and goes for it, we're gone. We can see it broke out there but closed back in again. Okay, it did here and closed back in again. We're looking for a close out of there. So we've gone reasonably aggressive with that entry above this pivot point where my cursor is now. But I've not gone and used the conservative 6-4 moving average high, which is part of the Elliott wave indicator suite, because that would be an entry at 172.62. And for me, that's too conservative. I want to be more aggressive with this. This is the previous rejection. So if I'm above there, 169.92, that makes sense. Stops just below the wave 4. And we've got a risk to reward of around 1 to 1.6, which is my minimum at $192. So very, very sensible there. Just one addition with this CROX compared to GSK is this. I noticed that this is a really sort of what we call orderly profit taking pullback. So I put the regression trend channel out to see if we were over 0.9 on that Pearson's R, so we could get more of an aggressive entry. But again, we don't want to be too aggressive. We don't want it, is it just popping out of this regression trend channel? We can see that it's rejected before. So let's just get above that last rejection zone there. So 2 potential swing trades for longs on a Santa Claus rally going into Christmas. After this recent pullback, I mean, there's lots and lots of stocks. Again, I went through about 50 this morning, found about 10 real good ones, and these are just two. These are highlighting two using the Elliott Wave Indicator Suite there, and I will put the link down in the description. But also, please, 2022, if you want to make a difference with your trading, whether it's futures trading, you come in on demand and trade futures live with me, or you go for the Premier Plus and get everything, my blend investing, stock swing trading like these stocks every week, and the ability to chat with me privately. So have a look at that, take a look, and hopefully we can get some new blood into the inner circle in 2022.